Hey guys, this is Bruce Marshall from Simpler Trading with the nightly video for Tuesday, July the 17th. So I've got Netflix up on the screen because that was the big catalyst from yesterday. You know, Netflix reported after the close on yesterday and really sold off hard in after hours and overnight, kind of brought the markets down. And I was wondering, we were all wondering, you know, how was it going to play out today? Because you would think that Netflix is going to drag down the NASDAQ and Amazon and, you know, Google and Apple and all those, and it didn't. So we opened up here this morning, and really right from the opening, we, you know, bounced down a little bit, and then we just kind of went higher all day long, and you know, really nice turnaround in Netflix. Still down, yes, it's still down from where it was. But you know, not as bad as it appeared that it was going to be, and it did not bleed over into the other sectors that, you know, we were thinking it might. Very positive for the market, right? So let's take a look at the S&P and see what it did today. And if you didn't notice this, if you weren't watching today during the day, big rally off the lowdown here. We flushed down, had a little slight turn here, and then it was just straight up, you know, after that. So we went all the way to 28.14, which is about 25-point one-way move. Ironically, this is a fib level up here at 28.14. We kind of got close, failed here. This doesn't bother me. This doesn't mean a lot. I think a lot of this was coming from short covering, but it also turned into bearish sentiment turning bullish again. And I guess the thing to remember, and while I'm saying that, I'll show you the NASDAQ. If you look at this chart and look at the NASDAQ, it looks almost exactly the same, right? Rut's a little different. We had a kind of a pop and drop in the Russell. I still like the Russell. I still like it to the upside here, just because the composition of the Russell, especially over earnings period, tends to do better, and is not so sensitive on the key names like the NASDAQ will be. So, you know, be aware of that. But, you know, again, let's switch back here to the S&P, and well, as a matter of fact, let me bring this over and I'll show you this. Do it on this longer time frame here, and you can see, you know, our all-time high here, 28.72. You know, and then we tanked, hit that 200-day, came back, hit it again, hit it again, hit it again. We're kind of, I think, out of the woods. We were thinking right here, I was thinking we might come back and touch that, and we didn't, and we're kind of off to the races now. And the really big line in the sand was that 2800 line, which I just made a mess of, but we have kind of broken through that. The reason that's important, there it is. The reason that is important, once this is cleared enough, but basically what happens that as we get higher, that will tend to act like support, you know, as we come back up. Now that is assuming earnings are going to be good and all that kind of stuff, right? So, you know, how do you play this? Well, on a short-term basis, you know, for tomorrow example, I don't know. I really don't know. I hate to say that, but it all depends on earnings. I will say this: we had CSX, the railroad company, report after the bell today. Crushed it. Great quarter. In the morning, we have, I think it's Canadian Pacific. Well, it's tomorrow after the close. We've got a lot of big names starting tomorrow. We've got Union Pacific reporting on Thursday. KSU reports on Friday. Those are all the transports, the railroad stocks. We had UAL had earnings today after the close, did great. So as the transports go, typically the saying is, as the transports go, so do the market. That's going to give a good tailwind to the market. Also, financials are starting to act better. We've got Morgan Stanley on Thursday. We had Goldman Sachs with a stellar quarter, but so reaction to the quarter. So we'll see. So if the financials get involved, transports start kicking up like it appears they're going to This market can still go a lot higher. But I will say this: just be cautious on the way up, and tighten up stops, trailing stops, so forth. As we could have earnings misses and give us some down days. We could still have the China trade war tariff stuff give us some down days. So, as always, be cautious, size according to your risk, and and then let the rest take care of itself. But again, I'm still bullish. There's no reason at all to want to short this market, right? So I don't have any specific trade setups for you guys tonight, just because we're kind of in limbo land, being up here at breaking through 2,800 on the S&P and a new all-time high on the NASDAQ as well. It is tough to say how we come in the morning and trade this, because there's a NASDAQ, does it take a breather or not? And again, it's going to depend on earnings, so it's kind of it's touch and go at this point. But anyway, I hope this helps. I want to give you the thought process of the bigger picture of the indexes and where I think they're going. So with that, again, be nimble the rest of this week and next week especially. We got lots of big names next week. That'll be the most critical week probably next week. So trade, be nimble, trade size appropriately. And with that, good luck in trading, and I will see you guys at the next update. Thanks a lot.